EPK Capital presents Daily Brief for 5th September 2025. Hello everyone, welcome to EPK Capital's Daily Brief video. I am your host Rutvik. In this series, we try and update you and make sense of all the important news from the world of finance that came out globally. So, without further ado, let's begin. The rally, a forward-looking bet. The past 24 hours have been defined by a powerful and, at first glance, counterintuitive market dynamic. Major global indices surged, not in response to a singular, definitive piece of good news, but on the back of weak economic data released yesterday and the resulting conviction that this weakness will force central banks to pivot to a more accommodative policy. The core narrative of this period is the market's collective decision to trade on the forecast of a Federal Reserve rate cut rather than on the confirmation of one. This optimistic sentiment created a robust bullish session, with investors largely shrugging off other global economic and geopolitical events to focus squarely on the prospect of lower interest rates. Global indices, a tally of today's gains. The widespread rally across global markets today underscores the interconnectedness of the world economy, with investor sentiment in one major region, the United States, rapidly rippling across continents. U.S. stocks concluded the day with significant gains, driven by the belief that a softening labor market would encourage the Federal Reserve to cut interest rates at its upcoming meeting. The S&P 500 led the charge, closing at a new all-time high. Here are the final closing levels for the major indices. A notable metric reflecting the prevailing de-risking sentiment was the Volatility Index, or VIX, which is often referred to as the Fear Index. The VIX dropped by 6.42% to 1530. This decline signals that investor uncertainty has fallen significantly, as market participants overwhelmingly bet on a favorable outcome from the Federal Reserve. A lower VIX suggests that traders see less risk of a major market downturn, reinforcing the bullish outlook. The positive sentiment originating from U.S. macro forecasts extended its influence across the Atlantic and into Asia, though not all markets responded with the same degree of enthusiasm. This highlights a critical, nuanced point. While global momentum is a powerful force, it does not entirely override a market's underlying domestic economic health. In Europe, Germany's DAX climbed 0.8%, while the UK's FTSE 100 added a more modest 0.2%, and the CAC 40 in Paris slipped 0.1%. The strong performance of the DAX was bolstered by local economic news, as a report showed improving manufacturing activity in Germany, with the manufacturing PMI at 49.8 in August and the broader Eurozone PMI rising to 50.5. Conversely, the FTSE 100's smaller gain occurred despite a weaker manufacturing report in the UK, where the August PMI fell to 47. Asian markets were broadly higher. Japan's Nikkei 225 jumped 1.5% to 42,580.27. Australia's S&P ASX 200 added 1%, and South Korea's Kospi rose 0.5%. Unpacking the macro and micro drivers. The market's movements were not monolithic, but a complex interplay of major macroeconomic releases and company-specific news. A closer examination reveals how these distinct forces shaped the day. The single most significant event driving today's market action was the ADP National Employment Report, released yesterday on Thursday, September 4th. The report showed that U.S. private sector employment increased by a disappointing 54,000 jobs in August, a massive miss against market expectations. In a moment that perfectly encapsulated the bad news is good news market psychology, this weak jobs number was interpreted as a highly positive development. A slowing labor market signals a cooling economy, which in turn reduces inflationary pressures and diminishes the risk of an overheated employment environment. This provides the Federal Reserve with the data it needs to justify a pivot to an accommodative policy, which the market is now widely anticipating to take the form of a rate cut at the September Federal Open Market Committee meeting. This dynamic is a clear demonstration of the market's forward-looking nature, where the anticipation of a policy shift can be more powerful than a policy shift itself. Even with a strong macro tailwind, company-specific developments prove to be a powerful determinant of individual stock performance. The day's trading provides a compelling lesson that while the tide of the market can lift all boats, a company's fundamentals and future outlook can still determine its ultimate course. Salesforce, CRM, provides a stark example. Despite reporting better-than-expected quarterly results, the stock dropped nearly 5% to lead the Dow's decliners. The reason for the plunge was not its past performance, but its guidance for the current quarter, which came in below consensus forecasts. This serves as a critical lesson. In a market focused on future growth, a soft outlook can completely derail a stock, regardless of its recent successes. In contrast, Amazon, AMZN, saw its stock climb 4.3% after JetBlue announced it would become the first airline to partner with Amazon's Project Kuiper, its low Earth orbit satellite internet business. This development highlights how a new business venture and a strategic partnership can serve as a significant bullish catalyst, creating substantial value for shareholders. Other notable stock movements included T. Rowe Price Group, TROW, which surged 5.8% following an announcement of a partnership with Goldman Sachs, GS, to provide public-private investment solutions. Additionally, Williams-Sonoma, WSM, shares gained 5.6%, a move explicitly linked to investor confidence in Fed rate cuts, given the home goods retailer's exposure to the interest rate-sensitive housing sector. The geopolitical and policy landscape. Beyond the immediate market mechanics, significant developments in geopolitics and domestic policy were taking place, each with long-term implications. Russian President Vladimir Putin's attendance and speech at the 10th Eastern Economic Forum, EEF, in Vladivostok on September 5th were a major geopolitical event. The forum, attended by leaders from Laos, Mongolia, and China, highlighted a clear strategic reorientation for Moscow. The EEF's focus on accelerating the development of Russia's Far East and deepening energy and transport cooperation with Asian powers like China and India is a direct response to ongoing tensions and sanctions from the West. This signals a structural pivot toward Asia in an effort to diversify away from Western-dominated economic systems. A notable topic of discussion was the creation of a joint digital platform for the Shanghai Cooperation Organization, SCO, and BRICS, which represents a direct challenge to the US-dominated global financial architecture. On a lighter note, Putin also had a moment that went viral as he was captured on video learning Gen Z slang like chill sesh and total cringe during a tour of a cultural center designed to engage young people. This unexpected moment of levity provided a human element to an otherwise serious event. In India, the government introduced significant changes to the Goods and Services Tax, GST structure, which had a noticeable impact on local markets. The reforms aim to boost consumption by eliminating the 12% and 28% tax slabs and shifting most items into lower 5% and 18% brackets. This is a clear example of fiscal policy directly influencing market sentiment. The initial market recovery, which saw the Nifty index touch a high of 24,180, was a direct response to this policy. By lowering taxes on consumer goods, the government aims to stimulate demand, which is a powerful driver for corporate earnings and economic growth, demonstrating a classic link between policy and market performance. The Crypto Corner institutional maturation. The cryptocurrency market also saw significant action and a notable shift in institutional behavior. Bitcoin slipped modestly to around $107,400, a decline of 1.20% over the past 24 hours, while Ethereum fell 1.71% to trade near $4,387. The total crypto market capitalization stood at approximately $373 trillion. While Bitcoin's price has been consolidating, the most crucial trend is the notable rotation of institutional capital from Bitcoin-based exchange-traded funds, ETFs, to those tied to Ethereum. In August, Ethereum spot ETFs amassed approximately $4 billion in total inflows, whereas Bitcoin ETFs experienced about $2 billion in redemptions. This capital rotation is not merely a change in preference. It signals a new phase of institutional investment. Investors are moving beyond viewing Bitcoin as a pure store of value to valuing Ethereum for its staking yield and its pivotal role in the decentralized finance (DeFi) ecosystem. This shift highlights a significant maturation of institutional crypto strategies, reflecting a more sophisticated understanding of the sector's diverse utility. The institutional embrace of crypto is being facilitated by new product offerings and a developing regulatory landscape. Digital asset manager Bitwise listed 5 of its crypto ETPs on the SIX Swiss exchange, including staking and index products. This move is a direct response to Europe's clear regulatory environment for digital assets. The EU's recently implemented MiCA, Markets in Crypto Assets framework, provides a transparent, auditable structure for asset tokenization and institutional investment. This approach contrasts with the regulatory uncertainty in the US, where reports indicate that Nasdaq is increasing scrutiny on crypto treasury companies. This growing divergence suggests that Europe is strategically positioning itself as a leader in creating clear, institutional-friendly crypto frameworks, which could attract more capital and innovation to the continent. The road ahead, the moment of truth. The current market rally is built on a single, critical assumption that the official U.S. employment report, due to be released imminently, will confirm the weak jobs data from yesterday. The market is waiting for the Bureau of Labor Statistics, BLS, to release its official August numbers, which are expected to show non-farm payrolls growing by 75,000 jobs, and the unemployment rate rising to 4.3%. The market is poised at a moment of truth, and the direction of the next session will hinge on this single report. There are 3 potential scenarios and their implications. 1. Weak report. If the official BLS numbers confirm the ADP miss, it will likely validate the current bullish rally. This outcome would provide the final piece of evidence for a September rate cut, likely pushing equity markets to new highs as a soft landing narrative solidifies. 2. Strong report. If the report surprises to the upside, it could trigger a sharp and immediate sell-off. This would force the market to rapidly unwind its conviction in a September rate cut, leading to a major reevaluation of Fed policy and a jolt of volatility. 3. Goldilocks. Report. If the data comes in right around the consensus expectations, it will likely sustain the current rally, but with less dramatic movement. The market would view this as a steady, predictable path for the economy, allowing the upward trend to continue at a more measured pace. The day's events, from the global equity rally to the shifts in the crypto space, all highlight a market that is fundamentally in a state of high anticipation. The central narrative for the coming hours is whether reality will align with the market's optimistic forecast, or whether a surprise will force an abrupt reversal, of course. While Bitcoin's price has been consolidating, the most crucial trend is the notable rotation of institutional capital from Bitcoin-based exchange-traded funds, ETFs, to those tied to Ethereum. In August, Ethereum spot ETFs amassed approximately $4 billion in total inflows, whereas Bitcoin ETFs experienced about $2 billion in redemptions. This capital rotation is not merely a change in preference. It signals a new phase of institutional investment. Investors are moving beyond viewing Bitcoin as a pure store of value to valuing Ethereum for its staking yield and its pivotal role in the decentralized finance (DeFi) ecosystem. This shift highlights a significant maturation of institutional crypto strategies, reflecting a more sophisticated understanding of the sector's diverse utility. Just a quick reminder that this video is for educational purpose only and should not be taken as financial advice. For your personal financial advice, kindly get in touch with us on details in description, or you can connect with your financial advisor. And that's all we had for this video. We hope this video was informative for you. If you think it was, then please do like and share this video. Also, do not forget subscribe to our channel for such wonderful daily content. Also, if you are interested to watch the videos in other languages, then you can also subscribe to EPK Capital's other YouTube channel. You can also follow us on Instagram and Twitter. The details are in the description.